Well, hello and welcome everyone to the Friday Right Capital educational webinar focused on mastering our cash flow reports. My name is Daniel Gregoire. I'm really thrilled to be here with all of you today as we really go through this information in a way that hopefully gives you a lot more confidence both using these cash flow reports and customizing them. So really exciting content today, and we're really thrilled to have all of you with us. I also just want to mention to all of you that maybe are joining us for the first time or aren't usually attending these webinars. We host these educational webinars each and every Friday at 1 p.m. Eastern time. So we're always thrilled to be here for you, kind of across the country around the lunch hour to just to give everyone some good context around Right Capital software, the different modules we have, and help you confidently present these tools to your clients. Now, I'll also mention that these are all recorded and stored within Right Capital's Help Center. So at any time, you can always watch a review or a replay of any of the webinars that we run here at Right Capital, and I'll make sure to show you all where to access those details as well later on. And another quick note here, we're excited to be able to talk about the brand new visual cash flow reports today, which are very new to us here at Right Capital. We've been working on them quite a while. We've had some great feedback on it already. But I always like to remind all of you here at here that are using Right Capital that we love your feedback. And the reason why we've been so successful as a financial planning software is that we of course really take your feedback seriously. And I can say that these webinars are a great opportunity to provide that feedback on these maybe brand new cash flow reports or the existing cash flow reports, as ultimately I personally deliver this feedback right to our development team, to our CEO, and it's always really helpful. So in the webinar today, you'll see a questions drop-down menu. That's of course where you can ask me questions directly, but it's also where you can just simply type in any feedback you have as well. And I'll make sure to go through and review that at the end. Now, we'll answer any questions that come in. Our content today should be around 35 minutes, and we'll make sure to get some additional information there afterwards if needed. But we're excited to express to you all these new cash flow reports, and let's dive into our agenda for today. So number one, of course, we're just going to talk about the cash flow module and those new visual cash flows, everything from how we generate those to why, what your visuals, that you're seeing might be a little different than the visuals that I'm showing on screen. We'll talk through all those nuances. We'll talk through, some important settings and assumptions as well that can impact and really, alter the cash flow reports that you're seeing. And then we're really going to dive into, customizing the PDF output as well, because that's a big part of this. Cash flows are incredibly, detailed and rich with data, but we want to make sure we're just providing the data that's most relevant to the clients. So that's our goal today. Again, would love to hear from any and all of you during the presentation. You can use the questions drop-down menu of the GoToWebinar control panel to communicate with me. And with all that being said, let's start having some fun in the software. So as I switch over here, I'll just again kind of remind you that we're going to be looking at my advisor portal here. It might look a little different than yours. It might be a little different branding overall, but here we can see my initial landing page here. And just as a quick shout out, as always, these webinars are all recorded and stored within Right Capital's Help Center. So if you ever need a replay, you can click the help icon. You can scroll down to training videos and webinars. You can select watch previously recorded webinars, and here we are. We can then see every webinar we've ever done and watch those recordings on demand. And this one should be updated shortly. So this is also where you can sign up for upcoming webinars and get your Right Capital training as needed. But in addition to that, after the webinar, if there are questions, again, just shout out to our support team. They're always here to help Monday through Friday, 9 to 6 p.m. Eastern for your support needs. And of course, you can live chat us, you can call us, you can email us, you can schedule a 15 or a 30-minute support call. You'll of course get little pop-ups from Mary here occasionally. But with all that said, let's talk about the cash flow reports. And before I dive into the reports themselves, I just want to set the stage for really, Right Capital and the way that we project data into the future. Because what the cash flows are so good at doing is just giving us all the data that we've provided the, the six initial steps, and we show how that data is being mapped out across the next 30, 40, 50 years to help your clients understand those really key questions of, are we going to be okay, and can we fund our retirement goals, and to really just kind of break that down in the most simplistic way. I just want to quickly just talk through this as it relates to the data entry itself. So I'm going to go ahead and just manually just pull that up. Wonderful. So what we see here, everyone, is of course the foundational information that creates a financial plan. And always like to kind of think about the cash flow reports as, again, the visual representation, or even just the data representation of how these six steps are mapped into the future. And really, it all starts with where the client is today. So typically, when we're building out the six steps of data entry for a financial plan, we start with, what does the client's balance sheet look like right now? What do they have for bank accounts? What do they have for investment accounts, credit card debt, mortgages? And all of that helps us to say, where are we starting this financial plan? What is, the balance sheet right now? And that's basically what we build out in the net worth. Now, how we treat that net worth as we project it into the future at Right Capital with cash flow based planning is, we say, okay, we know our starting place, the net worth, and we're then going to project that data each year into the future by accounting for, who's in the household for things like tax purposes, what kind of income do we see flowing into the client's life each year, what kind of savings are we pulling out of that income and funneling away to specific investments, and what are the expenses and goals that we're trying to fund in each of those years as well. And really, the interaction of the income, savings, expenses, and goals through each year of the client's life, and how it interacts, of course, with the net worth, is the visualization of our cash flow reports. So as we access those are really telling us the story of how this client is currently set to navigate through the remaining years of their life, as we're making that projection to take a look at some what ifs, for example, down the road. So let's talk about our case study today with Bruce and Betty, always a popular one for me. So just kind of talking through this quickly, as we look at that data entry, for example, we have Bruce and Betty with around 1.3 million of invested assets. The household includes Bruce, Betty, kind of that prime pre-retirement age, as well as some children. We have Hulk Jr. and Sally here. And in addition to that, we can see that maybe Bruce and Betty have a household income of around 250,000 annually. They are, saving as much as they can. In this case, they also, have some expenses that they're trying to fund in pre-retirement outside of the expenses we've already laid out, like mortgage costs, car payments, that kind of thing in the net worth. And of course, we can then see as well, what goals are they trying to fund in the future? Maybe send their kids to college, retire at a specific age, have some, expenses that are available here. So this is the data entry. And now let's look at what this story looks like as we project it, in this case, with a family that's, in their 50s, living till 95, another 40 plus years into the future. And that's where the retirement cash flows really shine. They're going to give us all that data around, what this looks like as we, navigate, into the future. And the first thing we're going to see when we open, the actual retirement sub-tab cash flows is our brand new visual cash flows with the cash flow maps tab here. And these allow us to see, Sankey style charts, which tell us, each year of the client's life, what does it look like in terms of their income total? What does it look like for their, expenses, tax payments, planned savings? What does the breakdown of each of those look like over time, taxes, and maybe any excess cash flows that are in the plan. So this is the new visual for us, and we're going to talk through this really in detail. But to make this make a little more sense, of course, we're going to look together at, of course, the actual summary of cash flows. because this is the raw data and in the same order of information that we see within the cash flow maps area. And this is important for us to be able to know about, because this is truly the area where we're going to be able to track all the details of this financial plan over time. So we can see that maybe this year, we see our total income inflows of around 250,000. If we wanted to know the makeup of any of these underlined headers, we can simply click into them to see, for example, what's the breakdown of salary or social security, or even further, the breakdown of salary for Betty and Bruce's salary as we analyze, what's making up that total income that we see. Maybe we also see things like, some other income inflows. We're wondering what those are. We know we entered the data, but we're just making sure we're aware of the information so we can see, oh, looks like there's also some options, stock options or RSUs, being liquidated in those years, causing some, income to flow into the plan and be taxed appropriately from a stock plan that was entered in the net worth. And of course, this is a great place to visualize what do the total expenses look like, where we have, a breakdown of total costs, goals, tax payments, any planned savings, and as well any spent unsaved cash flows or positive net flows. Now, before we really get into all the details here, I just want to remind everyone, we're going to explain why there's positive net flows here, as well as some spent unsaved cash flows. We're going to explain, the planned savings and how that maps out, and all the details around tax payments and things like that. But we first just want to give everyone a quick overview of the data before we start getting into the details. So as a reminder, here you can switch between any plan that we have. So maybe the retire at 60 plan, maybe the retire at 60 with some extra catch-up contributions from the Secure Act, maybe a proposed plan. So we can cycle through any options we like here. In addition to that, again, when we're looking at the cash flow summary, we're looking at each year of this client's life. We can see the ages, we can see if a client passes away, we see the ages turn to a dash there, and we can see, the breakdown of everything from RMDs entering into the income inflows to healthcare costs, growing our expenses at the end of life, for example, with long-term care costs, maybe driving, up those expenses. And, let's just quickly, though, remind everyone of, each one of these years has its own visual representation within the cash flow maps. So here, for example, I can see calendar year 2023, 2024. I can scroll over, all the way to the client's retirement age potentially, where we can see, indicating this is the year they retire, or maybe another year in the future where somebody's, collecting, other types of income. And this gives us the breakdown again of exactly what we see in calendar year 2023 within that summary tab. So again, the total salary comes in to the waterfall graph. We then can see the makeup of just expenses. Again, the 123,000 here is going to match what we see here in 123,400. The again, tax payments of 61,533 again are going to match, the next column over, 61,533. And so we're going to keep being able to kind of work through that data and see, what is this client spending their money on? And maybe, what are we saving? And maybe, with the specific financial plan we're looking at, are there opportunities to save more? In this case, we have some spent unsaved cash flows that are not accounted for, that are just maybe being ignored in the financial plan. So maybe we can talk about putting that money to work for the client and setting up a proposed plan where they're able to save maybe just half of that in a given year and show the benefit of that over time. So these cash flow maps are really helpful for us. And if your client is maybe a little more, friendly with a more of a chart style breakdown, you also can see the table breakdown here of that same information by year. So again, the same view that we have is seen here of total inflows, income inflows. Maybe as we move forward to retirement ages, we're going to see things like RMDs kick in. Maybe our salary is going away, but we have Social Security income. And this would really allow us to dial into, again, all the details here to say, let's click into Social Security to see what the makeup of this 85,000 is, where we can see maybe Bruce's retirement benefit, maybe Betty's retirement benefit, and maybe somebody's still working. So maybe there's even an earnings test adjustment being factored into this as well. So this is, so all the things we can really drill down into with this breakdown graph, similar to the way we can with the underlined headers in the summary area. So these are just great visuals. Again, you can look at any year of the client's life. You can toggle to specific life events like Bruce's retirement. You can see breakdowns of current plan, proposed plan, all the differences that you see. And at the bottom, of course, you can see net cash flows or spent unsaved cash flows. So there's no shortage of data here within the cash flow summary tab. And again, we're going to get into some ways to customize this. But before we go any further, I'll just remind everyone that there is options in this plan to also view other areas of the cash flows. Things like the net worth will tell us breakdowns of qualified and non-qualified assets, maybe some stock options or RSUs from a stock plan. We also can see breakdowns of primary homes and vacation homes, liabilities like mortgages, business assets, investment properties, trust assets. So this will help us see all the breakdowns of information that are important to us. And any of these areas can be quickly exported to a CSV file really easily there within the plan as well. So just keep that in mind. So this is always just a helpful way to kind of see this information and to map this out. But we also can see things like invested assets, for example, where we have beginning balances, ending balances. We can see planned savings breakdowns of what the client or co-client are saving into their invested assets. We can see employer contributions here, which is really the only place where we're going to break this item out specifically, which is really helpful. So if you are indicating a employer match in the 401k savings, for example, so if I'm in the data entry, let's call it the profile savings area, we can see that maybe Betty has a 5% contribution to her 401k, and maybe her employer is matching her based on the data points here, that there's a maybe 100% up to 3% is being matched for that contribution. And maybe even a portion of that is going to Roth, potentially. So we'd be able to kind of map that out as needed. But ultimately, this is something that we'd be able to showcase within those cash flow reports pretty easily overall. Now, we also want to just mention here that beyond the summary tab and the net worth tab, these cash flows are also really one of the primary areas to track portfolio return within the particular plan you're working on, besides just looking at the investment tab, where we're going to talk about the rates of return by account or the overall asset allocation. So this is where we can again see all that information, as well as things like insurance, cash value, for example. But this just helps us to track each and every year what's happening throughout the plan with the invested assets. And then one of my favorite areas of Right Capital is actually called the accounts tab. And this accounts tab within the cash flows, in my mind, is the best place to see the movement of money throughout the financial plan. So maybe if we have years, for example, where our summary is telling us that maybe we're spending more than we're making. For example, in calendar year 2035, we can see that this client is spending 124,000 while they only make 116,000, and we know that we can't make money up, so we have to get $65,000 from somewhere. I can then use that accounts tab to say, well, where is this $65,000 coming from in 2035? And I can do that by just simply clicking accounts tab. I can switch the ending balance by account dropdown to withdraw from accounts. And in 2035, I'm going to see that actually I'm funding that negative net flow when there was more expenses than income by depleting my taxable assets. And I could probably even click into this further to see, I'm probably pulling money from cash first, and then maybe I have to dip into some of the taxable investment accounts. And we'll talk a little bit more about, the order in which we pull money from and how to customize that in a little bit. But just as a reminder, typically Right Capital is going to pull the actual cash flow needs first from bank accounts and taxable accounts, then tax deferred accounts and tax free accounts, because we want to maximize the tax exempt values of those the tax deferred accounts as much as possible. Let them grow, get as much as value as we can out of those before they distribute at either ordinary income rates in the future or tax-free with Roth accounts. So again, we're going to dip into taxable accounts first. Then if we continue to run out of money, we'll dip into 401k assets, Roth accounts, etc. So great place to see the movement of money, everything from ending balances by accounts each year to additions to accounts, what we're saving each year, to even required minimum distributions kicking in at the new RMD age of 75. So we can see for this client, money leaving the 401k assets, entering into the taxable assets. But of course, in this year, we would also see a pretty high tax burden as well based on the RMD that occurs. So that would be factored into the normal cash flow summary. In addition to that, you can see things like net cash flows as well. So, positives and negatives, which is also great. But again, the visualization here of, how the money is moving within the financial plan and how the funds are exchanging, area or moving from, qualified to non-qualified assets after RMDs, or how they're being saved, is all really important here. And last but not least, we have an area for discussing stock options as they exercise, vest, and liquidate. And then, of course, for restricted stock, we'd be able to see, just the vesting and potential liquidation over time. So this is just a great way to see, different, stock plan grants and how they track over time. And when there are sale proceeds that are taxed at, ordinary income or long-term cap gains, we'd be able to see that again flowing through into the cash flow summary as needed. So let's now start diving into the details here, because I know there's a lot of really good nuances that can really help us dial into what's most important for us. And one of the first things I want to do is just talk through the spend unsaved cash flows column, explain that, talk through what net flows are, and then we're going to really dive into all of that within these new cash flow maps, which are really great visuals for the clients. So the first thing I want to remind you of is every financial plan in Right Capital has the ability to either spend off excess income in a given year. So in this case, we have an excess of $20,000 each year. That's on top of it's extra income on top of what's already been saved, what's already been put towards expenses, what's been put towards goals. And so in this case, I've selected a planning method in Right Capital that assumes that any excess income is spent. Now, that's for pre-retirement, and that's helpful because maybe, I'm not entering all the expenses and I want to just make sure that I'm not over counting savings. Maybe it's a quick prospect plan. So I'm just going to say, I know what they're saving, I know what they're have for goals, and I'm just going to make sure the rest is kind of spent off and ignored because maybe that's the going out to dinner money. But we can also think of this as, maybe for a client who you do have a detailed breakdown of their expenses. Again, maybe you have used the budgeting tool that we just revamped, and then you've been able to track their spending, so you really have a good idea of what they're spending month to month. You'd actually be able to say that maybe this is something that we can see again as an opportunity to save more. So you could look at each year of the client's life and say, well, in certain years we might have some real opportunities to save more, based on our spent unsaved cash flows. So all that is a great visual. And then again, there's nothing to stop you from setting up a quick proposed plan and showing a plan that saves another 10-15,000 a year and show the benefits of that. So let's talk through that setting though, because there's also the option, instead of spending the excess cash flow, to automatically just save and reinvest that excess cash flow. So those settings are found within the gear icon settings tab. And you're going to find these settings under the methodology area under the planning method. So just as a reminder, Right Capital allows you to choose between two different types of cash flow planning. Cash flow based, which actually saves and reinvests all excess income into a taxable account, versus the modified cash flow based plan, which again assumes that any excess cash flows are spent off and ignored. Now, again, depending on the client, depending on the level of knowledge you have about their expenses, you might choose one or the other. Or you might just assume, let's err on the side of caution, let's under promise and over deliver and just assume everything else is spent off other than what they're telling me. But these will have big impacts on both the visuals we see as well as the actual financial plan itself. So as we switch this to excess cash flows are saved into a taxable account, let's head back to that retirement cash flow and see where the changes take place. So previously in 2023, we had an excess around $20,000 that was being spent off and ignored. What we now see in this waterfall diagram is that the spent unsaved cash flows area is no longer here. Same as the summary tab, we can see there's no longer a column for spent unsaved cash flows, and instead the positive net cash flows has increased to 30,000 as opposed to 10,000. So what we actually are seeing here as a default in all of your plans is that the planned savings area is only going to show your qualified savings or maybe your pre-tax contributions to, let's say, a 401k or an IRA, while your net cash flows that are a positive value are actually representing the amounts that are being saved into a taxable account. So we can see this in real time. We have, for example, in calendar year 2023, 35,000 of planned savings. That's going into the 401k account, for example. And then this positive $30,000 net flow is actually being saved and invested into the taxable account bucket. And so let's see that in real time. Again, accounts, additions to accounts, we can see the $30,000 being saved into the taxable bucket. We can see, Bruce's 401k savings here being, saved into that qualified bucket. And we'd be able to see, employer matches added on as well here in the accounts tab, because we, of course, are seeing both the employer and employee contributions there, which is why it's a little more than what we see here. But overall, we're able to see, the breakdown. And many people might prefer to see this positive net flow simply added as a taxable savings. So one thing I always like to just remind you all of is that in the gear icon settings area, in the same place we can choose between cash flow or modified cash flow based plans, we can choose to, for example, simply include those savings into the actual planned savings column. And this is for modified cash flow only, because again, this is going to be something that is only available if we choose to save excess. So include taxable savings in planned savings column. If I check that off and hit save, we're going to see that positive net flow move from the net flow area of the cash flows and move into my planned savings. So now in this waterfall diagram, the planned savings is jumping from 35,000 to maybe 45,000. And again, we can see in the summary that we no longer have the positive net flow. We can see that the planned savings just increased, and maybe for this year we know there's more money that we can save. So again, that's where maybe we're building a proposed plan that says let's save more of this. So let's do that really quick. Let's pretend we're building a proposed plan that says save more. So I'm in the retirement analysis. I'm building a new plan, save more, right? And as I add this new plan and save it in place, I can essentially, start with the same, breakdown. I can then visit my action items to make a change from the current plan. We start the same as the current plan in our new plans that we add. And I'm going to basically create a separate planning scenario here by just simply saying, let's hit edit. Let's add a new savings. let's add a taxable savings for calendar year 2023. And let's save another $10,000. So what we're going to see is that spent unsaved cash flows is going to actually lessen from 20,000 down to around 10,000, and our planned savings is going to increase from the 45,000 to 55,000. So here I have a save more plan. Now that includes the new savings. Obviously, we're going to end with more money. We can say, here's some benefit for you for the long term, but overall, when we look at the cash flows, we can then compare this and say, well, in your current plan, it looks like you have some extra cash flow in, your first year. Let's capture some of that. So let's, switch to the save more plan, and we can see that you can actually still, have some excess money to play with here, but we're actually gonna be able to save 55,000 instead of 10,000. And the value that shows for you is that by the end of your life, just by saving a little bit more this year, you can see, 117,000 more in ending investable assets than the current plan with just that one change. So these cash flows can really tell a very powerful story for your clients and help them to see the value of the recommendations that you're making to them. And again, this can be, analyzed for every year of the client's life for all those nuances. But there's one more thing that I always like to bring up, and that is as well that some of you might see a different view. And I just want to remind you that if you're using a goals-based financial plan, you actually won't see the cash flow tables, because in a goals-based plan, we're not factoring in income or expenses. Those variables are ignored. So you're really only going to see the net worth, invested assets, for example. So just as a reminder, if you're using a goals-based plan, you really are losing the value of that cash flow table, because again, we're not factoring in income or expenses in pre-retirement. So that's just something you want to be aware of. So that's if you're seeing a different view, that is likely why. So here we are with the cash flows. Now we no longer have summary tab. We no longer have those waterfall visuals. So just keep that in mind. And last but not least, before we just jump into reporting here, everyone, I just want to remind you that in the settings, there's also a really important tab as well, because many of you are looking at this graph and are saying, well, how are we projecting this data in the cash flows? And the answer is it's projected in the cash flows differently than the Monte Carlo analysis. So the Monte Carlo analysis introduces volatility and variable rates of return, while the actual cash flow reports default to using just a linear baseline growth assumption for investments. And many of you prefer instead of using let's say just a baseline growth assumption for those cash flows, to potentially use a specific set of returns. So maybe you want to throw a hypothetical scenario to show the client, what does it look like if there's a recession in a year from now? Or what if we take the past 30 years of historical performance and we line that up with the next 30 years? And so maybe then we use a cash flow report that aligns with the returns that we saw in the past 30 years for the next 30 years ahead of us. So some advisors are utilizing this pretty effectively, and this is a setting called Allow Display of Scenario Specific Cash Flows. And scenario specific basically just means you get to build your own rates of return or use a default rate of return to customize the outflows. So what it means here under retirement cash flows, everyone, is that you are able to see this new drop-down menu that allows you to say, well, let's look at the portfolio return each year, for example, and let's look at what happens if there's a recession or a flat return rate or something else happening, and we'd be able to actually analyze what this looks like in terms of the portfolio return, how maybe that changes the accounts over time and the value in those accounts. Maybe our value goes down a little bit before it starts increasing again, and how that can essentially impact all the other areas of the client's life. So again, that can be visualized in everything from the waterfall graph to the breakdown table to the cash flow summary and beyond. So this is all just helpful information. And as a reminder, if you wanted to maybe build out like a historical return scenario or your own custom scenario, you can always do so in the advisor portal under the models tab at the top of the screen using the scenarios area. So the logic is that you build a scenario one time, and then it will essentially just be available for use in every financial plan you have. So maybe I want to start with a Fed adverse scenario followed by modest growth and then modify it from there. I can highlight it, I can add scenario. It's going to copy this, and then I can, use this to build a new scenario. I can name it anything I'd like, maybe 30-year historical. And then I can go through and map out, whatever I need to one time, and then it's available for all my clients in each plan. So great. And the last thing, everyone, here before we get to all these great questions, and again, I appreciate all of you typing in, is the reporting, because cash flows are very valuable, but there's a lot of data there. So in Right Capital, under the gear icon reporting area, just as a reminder, this is where you're going to be able to toggle on all the nuances of what you want included in the report PDF, and maybe even change the location of some of these based on where you want to see the information. So we'd be able to toggle this around as needed. But any underlined header we can also click into to say maybe I need an overview of the summary, but I don't need all of those pages, for example, or I need an overview of the invested assets, but I only really need the employer match and other area. And here as well, we can say maybe I do want the waterfall, but I don't want the breakdown. And again, maybe I want the summary first and then the waterfall. So you can reorder, you can edit, you can work with all that however you'd like to. But this is going to be helpful, again, for us to be able to say, okay, we're saving this in place. We want all these things included, and then maybe we want to just download that report in a customized fashion. Because let's be honest, cash flow reports can be long. If we check all of them on, they can be 30+ pages. So we want to be mindful of the actual supporting information we're providing to the clients, and so I think that's definitely helpful. So as I open this, for example, I could see the report. I could also, toggle this over to the vault if I wanted to just drop it into a shared folder where the clients and myself can review this as needed. But all of this is helpful. We can store the information in different, folders. We can preview the information, and it's all going to be here for us to have what's hopefully a really valuable visual for the clients as they, look through their balance sheet and other areas of the plan. Apologize, I'm going to scroll fast to get to the cash flows here. So here we might then see, for example, my cash flow summary. I might then see the waterfall, which I toggled on next, and then some additional supporting information. So again, everyone, really appreciate you sticking with us through the presentation. I'm jumping into questions, so don't be shy. We love to hear from you, and we'll take the rest of the time here today to be able to talk through this in more detail. So if you're jumping off, really appreciate all of you, and looking forward to chatting more. So wonderful. Great, lots of good feedback on the cash flow maps here. Found it easier to work with the clients on. Let's see, net worth map. Let's see. Will the growth of investment accounts match the median Monte Carlo trial? So that's a really good question, and that's one that I always like to remind you all. The Monte Carlo is separate from the cash flows. So the growth in the invested assets area here is starting off just as a baseline, meaning a linear growth assumption here that represents maybe what we see in the invested asset tab for our annual return overall. But what we see is that specifically there's some accounts that might be a little different, like 529s. But overall, when we're looking at that rate of return, we're really looking at the linear growth assumption, or you can build out essentially one of the 1,000 Monte Carlo trials as needed to be able to show what that looks like over time. But really good question there. Can I direct savings into a variable universal life policy instead of taxable accounts? And you can, but all you need to do is just set that up a little differently. So what you'd be able to do is in a proposed plan, you would be able to say, I'd like to, maybe put money into, you want to add maybe a VUL or just, a universal life policy in the retirement analysis area. for that year, and you could do that, but there isn't going to be a way to kind of continually add in there. But that's certainly a feedback item we could take to the team. But again, instead of just checking a box off, you need to visit the retirement analysis. You need to select a year where there's extra cash flows and funnel that money into, let's say a universal life policy, for example. So you'd edit, you'd add new item, insurance, universal life, and you might be able to build that in. Great. We're going to keep rolling here. Can you please show and explain, let's see, why we would use a goals-based plan versus a modified cash flow plan? I would love it if, okay, we'll start with that and we'll move on. So the logic behind a goals-based financial plan is that the data entry is just a lot more simplistic, right? For the goals-based plan, we don't need to factor in income or expenses because the goals-based plan essentially just says, let's look at what the clients have in terms of their net worth today, and let's see what goals they're trying to fund after they save a certain amount. And we're just going to assume in a goals-based plan, which is a big assumption, that income and expenses just offset each other and that we don't need to worry about them year to year. So with a quick prospect plan, maybe, someone you're working with that you have limited time to gather data, maybe you're trying to get a quick output, the goals-based plan can be a great way just to say, just tell me who you are, what do you make each year, or I should say, I'm sorry, who you are, what's your net worth today, what are you saving, and what goals are you trying to fund later in life. And that is the essence of a goals-based plan, is we don't need the income and expenses because theoretically, if we know what we're saving, there's no real need to factor the rest in. So there's a lot of variables that really aren't included for those, but could be good for a quick prospect plan. So just as a reminder there. Great. A good one here, is there a way under scenario specific cash flows to create and say 6% returns in pre-retirement and then or 7% returns pre-retirement and then 6% in retirement? And absolutely. So a scenario specific cash flow is very simple to create. Again, in the advisor portal, you can visit the models tab. You could visit the scenarios area. And for example, this is my, flat 6% return portfolio, but, maybe, you'd want to build something that has, either a different, set of returns, at year 10 when the client retires. So maybe it goes from 6 to 5%, right? So you'd be able to, build this in, and just toggle in your different rates of return here as needed, and then you just simply apply that to the cash flows, and that would work. Another way you could do it is actually to build a glide path, but that might be a little more complicated. The scenarios are pretty simple to do so, and then you could just name it, Smith plan, 5% pre-retirement, 4% post, or whatever it's going to be, and you could enter that in as needed. And then just toggle it on the cash flows. So hopefully that helps, Chris. If you need help with that, again, our support team is always here to help you Monday through Friday, 9 to 6. Perfect. Great. So this was just really fun. You moved the report directly into the vault, which is really cool. I've been saving it to the hard drive first. Can you just show me how to do that? So of course, I'm on a Mac, so I can't promise if you're on a different computer, it's gonna be exactly the same. But once I generate a report in the gear icon reporting area, let's just say I want a quick snapshot report with a quick overview of the client's blueprint module and maybe those cash flow waterfalls for a really cool visual report for this client as I set them up. And maybe I want, let's say, the blueprint to come first, and maybe the snapshot and then the cash flows. So I want to download that quick, really great visual report for the clients. And when I want to drag that to the vault for myself, I'm in Chrome browser on a Mac. And so I'm in the vault area. I see the report populate here, and I can literally just click and drag it in very easily, and then it's going to populate for me. So hopefully that helps. Again, you might have a slightly different view on your screen if you're on a PC or others, but keep that in mind. This is a really good question. Are the model scenarios that are there by default built around different economic assumptions, or can a model scenario be built to illustrate a client being, laid off or for a set period of time? Would that be a more specific proposed scenario, for example? So I think let's just piece this out. First and foremost, our sequence of return scenarios that you can build in are for the most part, just kind of made up scenarios. That's for all of them other than the Fed adverse scenario followed by modest growth. So for example, when you're first getting up with the right capital, you're going to see a bad decade followed by slow growth. You're going to see a strong growth scenario, a flat return scenario, but this Fed adverse scenario followed by modest growth is actually a typical solvency test for equity reserves for a lot of insurance companies. So this is one where it is kind of built around different industry assumptions, but the rest are pretty just straightforward. A bad decade is 10 years of bad returns followed by slow growth, so low growth. So this is we're going to see very low returns for a long time. Strong growth is what it is, but you can really build out, again, any one you'd like over different timelines, and you can see how that's going to be impacting the plans. So hopefully that provides some different options here. And just as a reminder, these different toggles are not just available in the cash flows to show, let's say, 30-year historicals being projected for 30 years into the future. They're also available in the retirement analysis tool, where maybe you're comparing two sets of strategies. So a really good example of that might be maybe you're recommending an annuity or a life insurance policy that pays out cash value if they need to tap into it, and you say, well, what if there's a recession 5 years from now, or what if there's a different sequence of return that's not looking so good? And how much more is the plan with an annuity going to help when we can see guaranteed income versus our investments that are relying on market performance? So that's definitely a great place to visualize that here in the comparisons. The retirement details, where we look at income sources with different proposed plans, are also really great places to show the benefits of more guaranteed income, for example. So those are all really good. We actually have a presentation coming up in a few weeks on annuities, so that we'll really dive into that there to show, hey, let's look at the benefits of what that looks like, and to cover the bases. Great. How did you change the returns on the cash flows by the 30-year historical market returns? Where did you go to get that drop down in the settings? So I just built that in manually, Mike. So that's something you will have to do yourself, in the actual, retirement cash flows, or I should say, in the advisor portal. This is where you'll find the ability to customize sequence of return scenarios. So I do a lot of training, so I apologize, there's a lot here, but whether it's a flat return scenario, or whether it's 1987 all over again, or maybe March 2020 someday we'll look at, but maybe that ends up being a strong one for a couple years anyway. We definitely can look at these and build them in one time manually into the model scenarios area, and then they'll be available for every client we ever work with moving forward. So that is something you might consider doing. Again, if you have your data set, you need some assistance with that, we are happy to assist. You can, of course, reach out to the support team Monday through Friday, 9 to 6 p.m. Eastern. We are always happy to help. And again, as you see things you want maybe included in Right Capital related to cash flow mapping or any other details, let us know, because we do kind of unroll these updates in Right Capital in phases. So if we get a lot of feedback on one item, we can make sure to provide more flexibility for you if needed. But everyone, I'm gonna just take a moment here, just make sure I didn't miss any questions. It looks like we have some great feedback items. Let's see. But I think that's it for questions as of now. So if you do have questions, I can take them. You're welcome to type them into the GoToWebinar control panel. Perfect. So here's a good one here, actually, that just rolled in on the waterfall. It looks like taxes are aligned to come out before expenses. Can you move taxes maybe above expenses? So let's just take a look. And I think that's speaking to what we see right here, which is our tax payment is below the expenses, maybe some feedback to putting it above. I definitely think that's a fair point. The reason we set it up this way here is because it aligns exactly with basically what we see aligned with the summary for now here. If you want to reorder those, I'm happy to put through the feedback for you. But even if I switch to, for example, 2025, we're going to see goals pop up, in between expenses and taxes. So again, 2025, all of a sudden we have expenses, goals, then taxes, because that's just how it's aligned here in the summary tab. But happy to pass on the feedback. These are the kind of the things we love to hear from all of you. So thank you for that. Great. Is the net flows just taxable savings? So that's a really good question. The net flows represents, what's left over, right? So if we have negative net flows, that is money that needs to be funded from our invested assets. Then we look to that sequential drawdown sequence or customizing that sequence to say, how are we funding our negative cash flows? So if it's a positive value, in most cases, it's taxable savings. If it's negative, that's just what we need to draw down to actually, fund the deficit that we see in a given year. And again, if you see that in a given year, you can go to the accounts tab, you can go to withdrawal from accounts, and you can see where we're pulling that information from. Again, cash accounts, taxable accounts. So let's just to put that in more perspective, let's really amp up the expenses here just to, say, so let's say we put 100,000 of expenses a month. So, or maybe 50,000. So we're going to expect this plan to fail at this point. And we're probably going to be drawing down on invested assets. I'm assuming, at some point here, I'm going to need to change some goals here as well. Just to, again, to show you how we, pull the money here. I think it's just a helpful visual. So under retirement now, under cash flows, under withdrawal from accounts, we're going to see that, we're going to deplete all the invested assets in a certain order. Because obviously there's large amounts of negative net flows we're trying to fund. And under the accounts tab, I'd be able to see, first we deplete taxable accounts, then we deplete our 401k accounts, and then we deplete our other assets as needed. So yep, taxable, tax deferred, then tax free is the sequence you're going to see by default. Great. If you want to illustrate all excess cash flows being saved into the taxable account, would the best way to do that be using modified cash flow with a taxable savings card set to something really high, like 100% of salary? And that, I will say that is more of a workaround. If you're saving every excess cash flow to the taxable savings, I'd recommend just using the normal cash flow based planning method, which automatically assumes that all extra cash flows are being saved to that taxable account. So again, you could theoretically just add a very high taxable savings, and we're not going to make up money, so we're only going to save what's available from the income. So that would work. But if you didn't want to have to enter the card, you could just switch this to cash flow based, and then any excess income is automatically saved. So that, both work. I would say this might be easier for you in most cases, and you could even set every plan up to do this automatically. Perfect. And hear you on the taxes there, so that's perfect. Wonderful, everyone. I think there's been a very great webinar here. Lots of good feedback. Hopefully you all learned a thing or two about Right Capital's cash flow reports, and I hope you're learning a little bit more how to navigate these waterfall graphs and the breakdown graphs into your financial plans. But we're always thrilled to be here with you. We hope you enjoyed the content. We look forward to seeing you in next week's webinar. So everyone have a wonderful weekend. Enjoy the good weather if you have it, and we'll talk to you next time. Thank you so much.